to you. Today is Monday, the 16th of February 2026. My name is Francisco Gaffney, and this is my daily streaming all about governance, risk, compliance, and advisory boards. And today I'd like to talk about strategic pivots and the bits perhaps the most boards underestimates the brand's assets. When you're pivoting, your brand is your name is a sign at the front of the shop. So what happened there? So if you are changing what you sell, who you sell to, and what you stand for, your market will ask one hard question. Evidently, is this a real structural shift or is this a new paint job? Right? So I will use an example that you can translate to your own company on any industry or vertical. So you can take home the principles and apply them to your own environment. So I use an example. It's a bit extreme, if you may, but it's a real case in the London Stock Exchange, the company I'm watching. Though, if you listen to the principles, you will understand that actually this is applicable to any company of any size that is pivoting or looking to pivot. So the example to this week is a company that is shifting from oil and gas towards helium exploration and development. So they have revenues of 500,000, losses of 10 millions, and cash in hand of 4 million. But this is a small cap reality. But the interesting thing is a pivot, oil and gas to helium exploration and development. And you can translate this to any other industry that you're working on your own company. If you're pivoting from something to something else, so these are principles are very applicable to any company size and shape. And here's the lesson. Any story that looks even slightly cosmetic get punished fast, right? So if you're changing the paint work or the sign in front of the shop, to put it in a way, and the stock room is the same, so pretty much it's going to be punished very fast. Now, let's take a look at three problems to consider here when you are doing pivoting. Problem number one, boards try to pivot by changing the messaging first. So investors then look for evidence in capital allocations, governance, and reportings. So if those do not move, the credibility drops. Because hey, we have a great message of pivoting, but then you see the governance, the capital, and the reporting are exactly the same. It's a stock room at the back of the shop is exactly the same. Problem number two is that on the alternative investment markets, disclosure discipline matters. So price sensitive developments and communication sit inside a rulebook world, not a marketing world. And poor judgment creates regulatory and reputational risks. So if you're not in a regulated market, is the evidence that you collect to when you're going to pitch for investors is very crucial in these cases. And problem number three, in this live case that I mentioned, the rebrand and strategy shift sits alongside volatile outcomes. So a large loss driven by exploration and impairments, plus reliance on fundraising and monetizing legacy on the assets for runway, meaning that actually I'm uh, piggybacking all my old ways to do business to fund the new one. So that combination is where an identity change either earns trust or gets written off as a distraction. And you heard a word here, impairment is a very interesting word. It's pretty much how a company or an acquisition lose their value in time, and it's an accounting term. And 2 weeks ago, I had a full episode about impairment because it's a very fascinating way to understand this. As I mentioned, in other words, imagine a pivot without a proof is like a changing the shop sign, but leaving the stockroom full of the last season products. So you can ask now, what does proof look like in the board terms? When I'm sitting with my board or my team, what are the proofs that we're looking for? In the UK, a name change is not just a vibe, it's a legal act. For an UK registered company, changing the name is typically done by special resolution and then is filed. And this applies for LLPs, LTDs, PLCs, which is public companies. So even when your group structure differs, the principle still holds. You are signaling to the shareholders that the core of the business has changed. So the evidence needs to show up in hard places. And what is a hard place, you might ask? Just a moment, just to mention a few, is in the strategy, in the controls, the risks, the investor communications, the numbers you chose to highlight. So all these are the hard places you have to prove that you are pivoting, and this is structural change, not a cosmetic change. So as a board advisor, what I would propose to consider in these cases, number one is treat the pivot as an asset migration. Write down the old assets, that the ones that you're walking away, and the new assets you are building, and decide what must be true for the new ones to be investable. So the UK Corporate Governance Code is clear on board accountability for purpose, strategy, and culture. So use that as your anchor. So we say, well, but we don't have that because we are other type of a corporation. Use it anyway. You have a guideline there, so you don't have to reinvent the wheel. Suggestion number two, build a proof ladder that aligns with the reality of the alternative investment market. So convert the story into a time-bound milestone. What is going to happen when? So you can disclose cleanly and avoid hype language you cannot evidence. And remember that evidence is always the best defensible position that you can have. In the alternative investment market rules and the expectations under the UK market abuse regulation, push you towards dates, clear, timely, and accurate disclosures when information is inside information. So if you are not in this kind of alternative investment market, do it anyways. As I mentioned earlier, you will see how these records can help your organization to achieve higher multiples in the future, or a higher valuation of your own company, because you have all the evidence of what you've done in a very well clear, timely, and accurate disclosures at the time that you were doing it. Suggestion number three, separate brand narrative from commercial model. A new name can reduce an identity discount. But identity discount, I mean, that's a devaluation, but only if your revenue logic and risk profile move with it. So in this live case that I mentioned, reporting shows the shift asset focus on the cost of learning the model in public, and that is a trade. So say it plainly. Now, here's the board level questions I will put on the agenda, right? So if you say, are we going to pivot or not? So here's a few questions. What do we want the market to believe by the end of this year, right? In terms of this pivot. And other question you can ask is, what will we publish that makes the belief rational, right? It's not an impulse, it's a rational, structured message and plan. And the key word here is rational. It's not an optimistic thing, it's not narrative, it's a rational plan. So here we go. In practice, I see three types of pivots in UK listed land, or in any other company if you are a smaller company or not listed. And this is a rationality that you can use as an example. Number one, the cosmetic pivot. So it's a new tech, same economics. The market spot this very quickly and say, we are talking about the same thing with a different shape and color. Number two, the confused pivot. Everyone agrees the old model is broken, great, but nobody can define the new assets. So what you're pivoting to. So you end up with a scattergun activity to end up in the same place. And number three, the best one, the investable pivot. The board chooses a small number of assets to build, sets evidence milestones, and communicates with discipline. Right? So pretty much this is the principles that you can take home for any kind of organization. The investable pivot. The board chooses a small number of assets to build, sets evidence milestones, and communicates with discipline. Now, why this investable pivot approach matters? For three things in terms of outcomes, differentiators, and risk reductions. In terms of outcomes, You leave with a one-page asset migration scorecard you can use in your next board or the future boards meetings to test whether your pivot is showing up in governance, the numbers, and investor-proof milestones. Investor-proof milestones. In terms of differentiator, you apply an asset-by-asset lens, not a sector story. The case study I mentioned is simply a worked example of common patterns. So the market discounts identify shift until proof arrives in filings and execution. So that's not a really differentiator, because what happened is actually they are doing the shift, but there's not enough proof to revalue or increase the value of the shares of that company. So you make sure that your differentiators increase the value or sustain the value for a time until you collect enough evidence to increase the value of your company. And in terms of risk reduction, you build a narrative with disclosure discipline baked in, using the alternative investment market rules and the UK market abuse regulation expectations as a guardrails. So you reduce the risk of saying something the market treats as inside information before you are ready to disclose. Now, one thing you can take home today, and it's doable in 30 minutes or less. Write a single sentence that starts, our pivot is real because A, B, C, right? Three things. And these three pieces of evidence attached to these three things. And you can publish these within 90 days or so. So you have a very, very clear disclosures of why your pivot is real and the reasons why, and attach the evidence to it. Excellent. So let's pause here today and reconvene tomorrow, because tomorrow I will review a few factors that determine whether your launch succeeds or fails when pivoting. So now we took what is a pivot, the best pivot you can looking for to address, which is investor pivots, and tomorrow, which are the factors that determine whether your launch succeeds or fails. Now, if you are a board member or a leader and you want a B team looking at your pivot strategy, set up a 30-minute call with me so I can understand your position and how our independent advisory boards looking from outside in your company can help you and your team without stepping on your toes, without the traditional consulting overhead, and without the public theater. So have a great day and see you tomorrow. Thank you. Bye-bye.